Hey guys, how's it going? It's Andy from Znga Investing. Happy Thursday. For the past couple months, I've been pretty consistent. I have missed a couple days, but mainly I've been trying to upload videos Monday, Wednesday, Friday, and I've kept that schedule for a while. But for some interesting circumstances, mainly for earnings, I decided to make an extra video. So in today's video, I'm going to be talking about my favorite stock that had earnings on Wednesday and things did not go well, and the stock was down around 12% after hours. And so if you want me to go over more videos in the future, maybe put out a video on a Tuesday or a Thursday, just talking about an in-depth analysis on specific stocks instead of making, longer list videos where I'm talking about 4 or 5 stocks in a single video, let me know what you think about that in the comment section down below. So a couple weeks ago, I made a video talking about what is my favorite stock overall right now, and that is Sonos, ticker symbol SONO. They are a luxury speaker company, and they've done incredibly well over the past couple months. This is a stock that I pointed out that could double in the next year. And since that point, the stock went from $15 up to $17.50 today, when it was up around 5% during the day, and now it's back down to around $15.50. And so in this video, I'm going to be talking about kind of what I'm going to be doing with this position going forward. On this channel, it's really easy for me to talk about the winners that I've pointed out. We can talk about the 5% that I'm up with Southwest at this point. We can talk about the trade that I made on Zynga today that, they beat expectations, they're up, and that's going to make me a solid 5% for just a couple days of exposure. But I think it's very important to be as transparent as possible on this channel and talk about when things do not go correctly. So in this video, I'm going to be talking about what I'm going to be doing with my position. We're going to be talking about the earnings report and how I look at the numbers, and then we're going to put it all together and talk about what I'm going to be doing with this position and kind of explain how I handle these normal trades. For the most part, things have gone very well for me overall. My portfolio is up almost 40% so far in 2020, but things don't always go perfectly, and you're never going to have a 100% success rate with your trades, and so I'm going to talk about how I handle that in this video. Before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinion on Sonos Stock, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Also, don't forget to ring the notification bell so you don't miss whenever I upload on a random day like a Tuesday or a Thursday. With that out of the way, let's start talking about Sonos, ticker symbol SONO. Before talking about the actual earnings that came out, I want to talk about what's been going on with the overall market and explain why I decided to take the position that I did. In the past couple of weeks, we've been in the middle of earnings season, and one of the things that you see during earnings season is high volatility. High volatility means that the expected move of a stock is higher than normal, and as a result, the options prices are going to be much higher than normal. In my opinion, this is a great time to be taking advantage of selling contracts. And so volatility has been very high recently. And so that is very bullish for me overall, just the fact that I can get ridiculous premiums for these stocks. And then you look at the earnings reports so far that we've seen in 2020. While the numbers are a little bit old, it's like a week old, we're seeing 85% of companies have been beating expectations compared to the around 70% that we've seen as the historical average. So that makes me feel very bullish overall. Then when you look at the tech stocks that have been doing very well so far during this earnings season, kind of leads me to believe that Sonos would be following a similar path. And so that leads me to be very bullish overall. And so the reasoning behind this position is I was willing to sell a put for a strike that's higher than the current price. And so what that means is the current stock price was $16.50. I was willing to buy at $17.50, but they had to pay me $220 overall, which is $220 per share, meaning that my average price is going to be around the $15.30 mark. And so you might be wondering, why don't you just buy shares of Sonos if you feel so good about it? And the positive thing about selling options is if the stock goes up, I would have made around 12% overall. And I don't have to worry about owning these specific shares. And it's a stock that I would happily own. So if the stock falls like it did today, I'm going to be a proud owner of 200 shares of this stock, and someone paid me almost $400 total to do that. And so my break even at this point is below the current price, which means I'm going to be in the green at this point right now, even after this 12% move. And so selling options is a great way to take advantage of this high volatility, and it's something that I will constantly be doing around earnings season. So selling options has been one of my favorite ways to be making money during the stock market. It limits my overall exposure. It does cap my profit, that's for sure. If the stock hit positive today and was up 12%, I would have been stuck with the profit that I had locked in with that options contract, but I will happily take that. I think it's really important in the stock market to not be super greedy. And so during this, I was very happy taking the 12% profit overall, and I was not going to be chasing the 30%. I do think this is a stock that could double, but the high volatility from the earnings season was something I wanted to take advantage of. So now that I've kind of laid out what I did and my expectations that I'm going to be owning 200 shares of Sonos in a couple weeks, let's talk about the actual numbers that pushed the stock down around 12% after hours on Wednesday. If you've been on this channel at all, you'll know that I hate earnings reports because they're so stupid overall. You can just get one little part of the report that the market sees and pushes the stock down. So when I looked up Sonos earnings today, and the first thing that I saw was that Sonos beat expectations for their sales, I was like, fantastic. And then you look and it's down 12% overall. When you see a positive story about your stock on earnings, you expect it to go up, but that's not always the case. And so you really need to think about what's been happening recently with Sonos. When I put up the 3-month chart, you can see that Sonos has been chugging along. And when that happens, the first time that you see some negative news about the stock, which we'll get to in a second, that's when you start getting the selling. People are going to be taking profits on a stock that they think might have reached the end of the line that it was going to be going up. And so that's when the selling comes in very strong, even though the stock was up around 5% today. So let's talk about the numbers that came out in today's earnings report. So the company beat expectations for revenue with $249 million compared to the $236 that was expected. That was better than expected, but it's still down year over year. But you need to take into account that this is the middle of a pandemic, so the fact that they beat expectations was very good. Sales were down around 4% overall, but the really positive thing that I saw was that their direct-to-consumer sales, which is mainly through their website, was up 300% overall. If you remember my video talking about Sonos the first time, one of the things that I was really worried about was how the pandemic was going to be affecting the way their business is run overall. When you think of luxury cars, this is not something that you're going to be buying online without testing it out first. You're going to want to go in, make sure that it looks good, feels good, and it's something that you're confident buying because of the hefty price tag. Sonos is not a cheap product, and these are the higher end smart speakers out there. Sure, you could go online and buy an Alexa and be pretty confident with it, but I thought that a lot of people want to be testing them out in stores to hear the quality, kind of understand how they work better. But the 300% increase in sales shows me that people are comfortable looking at the reviews and kind of the reputation that Sonos has created for themselves, and I thought that was very positive overall. The CEO during the call talked a lot about some of the things that they've been seeing with the trends of consumers, and especially that people have been very heavily investing into home improvement based off the fact that people are stuck at home a lot, and what's a better way to spend the time than have a very high quality sound system. And so that's where they're expecting that a lot of the positive numbers were coming from. But the numbers that pushed the stock down significantly was their overall loss. They reported a loss of 52 cents a share, which was higher than the 26 that was expected and higher than the 13 that happened year over year. And as a result, this was a pretty big miss. And this is why the stock was down significantly. Anytime you have a tech stock that has a widening loss, it's usually not thought of as a good thing. But I wanted to put those numbers into kind of perspective to see how that looks overall. Sure, a widening of a loss is not great, but let's see how the fundamentals of the company looks, especially with their cash on hand and their long-term debt, to see how worried we should be about that overall. So that earnings per share miss of 56 cents results in around $57 million in loss in the last quarter. Looking at their cash on hand that's currently sitting at $283 million and a long-term debt to equity that's below 0.1 in the last quarter, yeah, that doesn't worry me at all. Obviously, this is not a great thing when you're going backwards. Every tech stock, or every company, every company wants to be profitable, so a widening loss is not a great thing. But the fact that their cash on hand is so high and their long-term debt to equity is so low doesn't make me feel super worried about the company overall. We are in the middle of a pandemic, and I'm not that upset about this miss. So I'm looking at the positives from this report a lot more than the single negative. We had beats when it came to revenue. They actually came out with a forecast for the next quarter, which is not something that we've been seeing a lot of recently. I was talking about this as why I was worried about the market overall, is that a lot of companies were cutting guidance because they really don't know what's going to happen. But Sonos came out and said, you know what, we're expecting to have $300 million in sales overall in the next quarter, which would be around a 20% increase year over year. This is a company that relies heavily on the holiday sales, and so this isn't a quarter that's super important to them. And the fact that they beat their expectations for revenue makes me feel very good overall. So let's summarize the numbers. We had a beat on revenue, you had a 300% increase in their direct-to-consumer sales, mainly from their website. They had a 4% drop in sales overall, and they had a wider than expected loss of more than 50 cents a share. But in the broad scheme of things, I'm not that worried about Sonos overall. This is the importance of picking stocks that you're going to be selling options on and making sure this is a well-run company. This was a stock that I was happy to buy at $15. Obviously, it's going to say on the computer that I'm going to be buying it at $17.50, but we all know that I got $2.20 per share. So it's going to be like I bought it at $15.30. So I think this is an important lesson that anytime you see earnings come out for a company, you really want to look at the numbers. The market is going to nitpick a couple numbers from the overall report, and it's going to push the stock up or down. But I think it's important to look at all the numbers to get a full perspective of what's going on. Obviously, you saw the 12% drop in the stock overall, and you would think that things were worse than they actually were. You have one really bad number. The 4% drop in sales is not horrible, but it's not great. But it was the widening of the loss that pushed the stock down today. So always look at the numbers for the overall earnings report and make sure that it doesn't change the kind of tune that you feel about a stock going forward. Sonos is still a stock that I'm very bullish on overall, and I'm excited to be a proud shareholder of 200 shares in less than 2 weeks. So let me know what you thought about Sonos overall, and let me know if you thought the market kind of overreacted to the 12% drop after hours today in the comment section down below. Thanks for watching. I appreciate all the support, and I will see you on Friday.